Hello and welcome. Today is Sunday, the 7th day of December, 2014. My name is Derek. Welcome to this weekend's silver chart analysis video. On Monday's session, there was a high of 1679, a low of 1416, which brought us volatility in barely over 18.5%, which is the fifth time this millennium that there has been volatility this high, and the fourth highest volatile month. The first one with this volatility in the millennium came in 2006. Spot where it had a high of 1468, a low of 1180. So on that day, it obviously had a major downfall, and the session managed to rebound quickly afterwards. In 2008, October the 10th, that's the day the stock market crashed. Everything fell down. The largest volatile day this millennium for silver. September 23rd, 29 or 22%, not much occurred from that one, other than another one a few days later, which brought it to the low. So a situation where it went from 36 down to 26, losing $10 in a matter of a few days. As far as monthly volatility is concerned, the top 10 volatile months for the 21st century has 66% in first place. 10th place is 30%, so that 18% is currently not in the top 10, but many days to go. Not sure if it will make the top 10 or not. From 1968 to 1999, there were 18 months with greater than 30% volatility, and 7 of them were over 45%, with the highest being March of 1980 for 169%. 13 of those 18 months occur from 79 to 82. The reason why I bring that up is when things get going, there can be a lot of volatility over a relatively decent period of time. So let's now move on to the charts. Of course, this is the Monday session. The lows and the highs for the week were set that particular day. And since then, Tuesday to Friday, going sideways, really continuing the previous range that it had done in November. As far as the 18 average band is concerned, it can almost state that it's barely going up, and it is. However, still needs to get above here for the uptrend to continue going. If it stays going sideways, then the 18 average band will obviously go sideways as well. So what I'm looking for on a reversal situation is for this thing to go higher, establish some sort of level of resistance at some point, and then have some sort of retracement within the band, and then break through established resistance for me to state that there's going to be a pattern of higher highs and higher lows on the daily term time frame. However, this move here should be setting up something decent. I'm going to talk a little bit more about this as I talk more on the longer term time frame. Let's move on to the weekly chart, and within this, the week ended with a gain of 5.57%, but still just correcting within this downward band. As I was saying before many times, step number one is for this to flatten out, so that's the next thing for it to do. Or, of course, break above, establish some sort of resistance, and the key level for the next part is this multiple hit low of around $19 per ounce. Let's move this on now to the monthly chart. And within this, I want to talk about volume here now. In here, this is like a stock market crash that I was talking about. There was large volume here. This top here, this is where SLV, the ETF, exchanged or encountered massive volume. And of course, the price goes lower. Somewhere in here, somewhere back in this point, volume started to go really high again. So in a situation where you see high volume, after it's been going higher, that's an indication of a possible top, in this case true. And when you have high volume after it's been going lower, then that's an indication of a possible bottom. Now, year and a half ago when this volume was big, it didn't go higher. However, this volume surpassed this volume. We've had massive volume the last few weeks, which is interesting to note. And I'm going to go back to this chart in a little bit, but for now, I just want to just quickly draw just a quick little chart. If you're in a situation, this is an intraday chart of a major large cap stock or maybe the Dow Jones or something of that nature, when you see high volume in this area there, that's an indication to say, okay, get out of my long positions, maybe go into a short, and then you start to see high volume here. Well, there's indication to get out of short positions, to get into long positions, and where you're going to lose on this deal is if it does something like this, and then boom, it goes lower, and then let's just assume volume here was 1,000 units, which is massive. Volume here was, say, 1,200. Of course, if 1,000 is massive, so would 1,200. But then this volume here is 2,800, which, of course, exceeds that volume. That's not that uncommon of a situation to have occurring, which is what's looking to play out here, where you have the big volume here and the massive volume coming into play. You don't know for sure if that big volume is complete and they're going to wash this thing out with even more capitulation on higher volume, but it's definitely an indication to be looking towards. Within this 18 average band, it's been resisting this area here, which was the second time on this downtrend. From this breakout, it resisted it, obviously breaking down below key levels of support. For me to talk about this pattern of higher highs and higher lows for a multi-month bull market, step one, flatten out. Step two, establish some sort of level of resistance. Step three, have a correction. Step four, break established resistance. Thank you for tuning in to this weekend's chart video, and have yourself a magnificent week. Bye-bye.